But like I was going to say, it's a matter of wanting to do it. Now, the other thing I wanted to talk about in terms of, how much time we got, by the way? Where are we? In terms of
49.
49? This will take a few minutes. Is this whole idea of being addicted to random rewards. That's really a powerful addiction, by the way. There are a number of studies that have been done, especially on primates, where if you start primates out, with teaching them to do a task, and you reward the task, or you give them a reward for the task on a consistent schedule. So they do the task, they get the reward. They do the task, they get the reward. If you stop giving them the reward, what do you think happens? They stop doing the task. But reward them on a completely random schedule, okay? Completely random. And from their perspective now, they don't know that you've decided they're never going to get rewarded again. Okay? That's what.
Good morning, guys. Back with another live stream. Today is August 19th. Today's August 19th, 2021. And this is your first time hopping on the stream. What I do on here every single weekday, hop on a live stream, review the charts that I'm actually trading, and also go ahead and take any charts that are requested in the live chat. If you do have any charts that you guys want to go over, type it out below and we can talk about it. Afterwards, I'm doing a backtesting project and I'm recording it here on YouTube. So after we get through the live charts, that's what I'm going to go ahead and do for about an hour, and then go back and review these live charts, see if anything happened while I was backtesting. All right. If you guys do have any questions, like I said, please go ahead and type it out. And during the backtesting session, I'm going to have Mark Douglas playing in the background on one of his seminars. And for the rest of this, at least for the next week, I'm going to be playing the same recording. Wanted to pick up on some things that I heard yesterday and also that came before the part that I recorded yesterday. I really enjoyed yesterday's stream. If you want to check it out, it's the most recent one that's posted. Right? It's August 18th. A lot of good info in there. Not only in the Mark Douglas recording, but also the first live chart section. I exposed one of my take profit techniques as far as, especially when it comes to AUD USD. This is when I talked about it. It's like a precursor to it. Basically, if price comes down to a certain Fibonacci extension level, I'm taking a certain action, or I'm looking to take a certain action at the first sign that tells me to actually take that action, right? So anyway, let's go ahead and get into this. AUD USD. Impulse correction, simple move to the downside. Just been holding it for a while. Was able to close it out at 5.5 R. So really good trade. Let's see. Yeah, I already sent it out, so we're good on that. What's next for this? Looking for prices to go down to this demand zone. That's it. Looking for prices to go down to this demand zone, and we'll see how it approaches that level. If price gets to that point, correctively, we're going to be looking for a reversal. If price just continues moving impulsively, or we get a solid correction here, we're going to be looking for, or I'm going to be looking for, what I'm about to draw right now, right? If it forms a solid correction like this, I look for a short impulse to the downside. Just like a prime example of what I was talking about yesterday. Let's say it comes down to just barely below this level, right? Not looking for it to move impulsively down past it, but come just below this level, put in a new low, and possibly reversing this area. Possibly, right? We gotta still see what's happening. But if that happens, definitely look for some to the upside. Yeah, and honestly, in this situation, I expect some type of rejection at that level, at least initially, some type of pullback from that zone. Update. Yeah, good on that. Okay, next, your JPY. So, yesterday, what I had drawn here is it's here, right? That's why I go here. Okay, so we got this correction to play out for us. Like we got two setups here. We have an impulse down now. We see that we got a slight pullback here, but it's not a major pullback just yet. Because we have this large impulsive move here, we need something that's comparative to that. We need a correction that's comparative to that. All right. So in other words, the bigger the impulse, the bigger the correction. So have this big impulse. We need a larger correction. The small correction is just going to be a part of the impulse since it's so small. It's not big enough for me to say it's the correction. At least for the 4 hour time frame, 1 hour time frame, obviously that would change, but it's just the 4 hours not good enough for us. So with this impulse, something that could happen, form a nice descending channel here. That would be lovely. We'll get 3 touches at the bottom, and look for a break, and then possibly look for a correction to buy there. Safety, just wait for break of the trend line, wait for a correction, look for a buy. Something I want to look at. I haven't looked at this in a while. Since April. And this is kind of like the DXY. It's just for the Japanese yen. And pretty much every single currency has this. Every single currency does have this. Not pretty much. Okay, so I can see it's still pushing up. Also, we got to break this level here, so that's gonna require some action on the 4 hour time frame. This price has rejected but the more rejections, the weaker the level. So good. So if I'm looking for price to or this to buy or the yen to gain strength, I'm looking for Euro JPY to continue pushing down at least for a short period of time. All right, let's go back to the forex charts. Okay, Euro USD off the 4 hour on EU. I'm actually going to the daily because this is more of a daily descending channel for me. Like this is where we first, or at least when I first see the descending channel. Okay, and I'm looking for price to come down about to this area here. We're looking for push up. 16500. Would be amazing if price exactly touched that price. I mean, exactly touch that price point and reverse. That would be amazing. All right. Okay. So we have a descending channel here, and we have a downtrend within the descending channel. The reason I like this on the 1 hour is because of the downtrend. All right. On the 4 hour, recognize the downtrend. So on the 1 hour, I can go down to this time frame and look for an impulsive break to the upside, and then look for a smaller correction. Okay, if you guys don't know my strategy, there's probably have like 5 videos and a ton of live streams where I go over my strategy. It's really simple. It's just an impulse and correction. Now most of you guys know that. It's just market structure. It's like basic stuff. But it works really, really well. All right. Still looking for buys here. So reversal setup, just need to look for a safety entry. Find this buying opportunity. Now initially, targets are just going to be at that high, which produces about a 4-to-1. But with this descending channel, it's going to be, should pay attention to price potentially breaking out of this, because there's potential larger profit, and the next target would be about this level, which produces close, about a 7-to-1. All right, so I'm going to go ahead and send this out. Make sure it's all in there. Okay, now gold. All right, gold. So that sell has played out for the most part. Didn't quite hit targets yet. Hit targets. Like at this point, I wouldn't even be holding this position anymore. Either one would happen if I took this position for a sell, and I wasn't really interested because it was not a big move. Number one, I could have moved my stop loss to break even. Once price got down, basically broke this low here, my stops definitely would have been at break even, and price came back up, I would have been stopped out at break even. Number two, price came close enough to the targets where if I was here manually, if I was here looking at the chart, I would manually close if I'm that close to targets. All right, so that's pretty much it. Let's delete that. You see a bullish pattern for me here off the 4 hour. So that's actually looks really good. Okay. I really like that. Yeah. Okay. Yeah, I like it for now. I like that level for now. See how price reacts to this area. Right now on the 4 hour time frame, I have a buying opportunity, but it's a buy signal right here in the supply zone. So, I mean, take that how you want it. I'm not going to trade that. That means no buys. Dakota does not buy. That's what that means. So, in order for me to enter a position if price is below the supply zone. I need to break to this level. I need a correction, and I need the price to sell off, right? So I haven't got confirmations for this downtrend yet. I, like I said, I do see a buy setup here, but being under the trend line, being right in the supply zone, that's bad. That's bad, right? So that means, like I said, don't trade. Dakota don't trade. That's what that means. Delete all that. So I'll just wait for it to see what happens. Okay. Now US 30. Man, it would be a shame if I was on mute. Okay. Well, it looks like US 30 didn't work. All right, let's see if. Yes. Okay. So it looks like the signal came off this engulfing candle here. Sales would have been right below this low. Price never pushed up high enough, so like would have been stopped out of this position. I took it. Here we go. Let's see if I would take it. If it's a 2-to-1, yeah. So I would have taken this trade, and the trade would have lost. Price continue to push down. Let's go back to the daily and finally set up. But this is good news. We got a high. Oh no! Yes, 30 USD. Okay, we have a high here, so we can have some. So prices go down. That means there's a nice downtrend on lower time frame. Some zones to work through here. Which one do we not need? This one looks like it's about at the notch level. However, we need this to be here at this low. We need this small zone. It's just a small area. Yeah, I need to delete one of these. Let's delete both of them and then level. Yeah, that was much easier than deciding between two. Okay. Okay, on the 1 hour time frame, like I said, I got this downtrend. We have two trends. I'm gonna draw the 1 hour downtrend like this, looking for a larger correction. Wow, that's too perfect. Right? That would like if man, that's a really nice setup if this happens. Because we have a large impulse move down, but we don't have a large correction yet. If we're gonna continue to the downside, how far would I like to see this come down to? Obviously, to be overextended at the bottom of this range. But if let's say if price doesn't do that, there's an area in here that I'm looking for price to come down to. Yeah, that's awesome. I don't even want to draw the lower time frame trend line right now because this is a much better setup. The lower time frame setup has a possibility for this to pull back further and then like ultimately that sell. And this is a solid, like I keep saying, it's a solid setup. I'm so confused. Like Okay. Well, that's really good news, but I'm still confused. My bad. I'm thinking out loud. There's like some no BS that I'm happy about, but I don't know why it's happening. Okay, copy that. Let's go to Discord. Let me, my bad. Reply. Man, AUD USD is tanking right now. It was, yeah, it was at 8.9. Now it's at 1. All right. We did all three of those. Last but not least, Bitcoin, which is what the thumbnail says. Now, for those that don't know, I don't readily trade cryptos like that. Like I used to be into cryptos within my first year when I was into pretty much everything that moved fast. Excuse me. This is turning into a better setup every single day I look at it. The more correctly this moves, the better the setup gets, pretty much. Okay, so price is still at this level. I like this level to buy at. We could even move it down if price moves down further. But this is how I'm looking to. This is what I'm looking for Bitcoin to do. Nothing's changed. If that trend line breaks impulsively to the downside, then something's gonna change. Then I'm gonna say, okay, let's look for sell, or let's look for a larger daily correction. But that's the level that I want to see things happen at. If we do break that trend line, I'd be looking to see uh, consolidation for a couple weeks before looking for the next buy, but definitely the next opportunity looking for a buy. Okay. So that's everything there. That means I can get into my backtesting review today. Let me check if there are any pairs. Sorry, I didn't have the chat pulled up during that time. Okay. Since there's nothing there, I'm going to go ahead and get started. Okay, so sorry for the poor audio. Looks like my mic's just not connecting to um my computer. I'll fix that in the review.
Learn enough about the nature of beliefs and how they function in our mental environment so that we can effectively install these beliefs inside our brain at a functional level without any conflict. That's what we're going to learn in the next 2 days. Besides also learning how to identify and neutralize self-sabotaging beliefs and what to do about euphoria. This is what this workshop is all about, right here. When you've got those in your brain at a functional level, you will stop the errors. They cannot happen. And to the degree to which they do happen is just an indication as to how much work you need to do to get those in your brain at a functional level. And if you really want to if your desire is strong enough to create consistent results, you'll do the work. If it's not strong enough, you won't. It's kind of that simple. And you don't have to feel obligated to do the work. Like I said in the very beginning, it might take a long time to get to the point where you're really willing to do what you need to do to get those beliefs in your mental environment at a functional level, because you may have other agendas about why you trade that are in conflict with these particular beliefs. There may be a lot of other reasons why you put on trades that have nothing to do with what it means to be consistent. Can anybody think of reasons why people trade that have nothing to do with being consistent? What might be some of those agendas that I'm talking about? Every feeling in the world? Okay, well, yeah, but anything specific? What?
Revenge, getting back from a trade you lost.
Well, that's an agenda, sure. Revenge. That's not going to promote consistency, I don't think. That's pretty inconsistent with what it means to be consistent. Anything else?
Addictive behavior.
What?
Addictive behavior.
Okay, addicted. You could be addicted to random rewards, which I'm going to talk about in a minute. That would be an agenda that would be inconsistent with what it means to be consistent. Anything else? Entertainment. Perfect. Anything else? Boredom. That's part of entertainment, but you entertain yourself when you're bored. Know some people like to be heroes? I work with a lot of traders who generate losses just so they can work their way out of a hole. Floor traders especially like doing that. They got sort of a cowboy mentality.
Self-destructiveness.
Yeah, right.
Be attention too. Some people
Right.
they have big losses. People gravitate to them saying, "Oh, sorry about that."
Right. And you probably did you get that on the tape? Okay, good. You were talking kind of low, so I didn't know if you picked it up.
Gotcha.
Masochism.
Yeah, sure. Yeah, there could be just any number of reasons, like you said. Just all the range is really great, but that's why those agendas will be reasons why people won't do this kind of work. Not until you resolve that what you really want first and foremost is to create consistent results. And that's why I said in the very beginning, a couple of hours ago, that it really has a lot to do with the way you want to live your life. But I will say that if you do the exercise I'm going to give you to install those beliefs, and if you do it diligently, and if you do it until you can do it without any internal conflict or argument, you will have succeeded in installing those beliefs. It does work. What?
I'm ready.
Good. But like I was going to say, it's a matter of wanting to do it. Now, the other thing I wanted to talk about in terms of how much time we got, by the way. Where are we? In terms of-
49.
quarter nine. This will take a few minutes. Is this whole idea of being addicted to random rewards. That's really a powerful addiction, by the way. There are a number of studies that have been done, especially on primates, where if you start primates out, with teaching them to do a task, and you reward the task, or you give them a reward for the task on a consistent schedule. So they do the task, they get the reward. They do the task, they get the reward. If you stop giving them the reward, what do you think happens?
Stop doing the task.
They stop doing the task. But reward them on a completely random schedule. Okay? Completely random. And from their perspective now, they don't know that you've decided they're never going to get rewarded again. Okay? But that's what you've done. You've decided you're never going to reward them again.
It's really deep.
And what scientists have found is that it depends on the personality of the monkey. Addictive behavior than others. I think there's probably some sort of chemical makeup that has a lot to do with it. But there are some monkeys who will do the task indefinitely. They never get rewarded again, and they keep on doing it. And that's why there's some people that can get addicted to pulling the handle of a slot machine or not pushing a button. And it has a lot to do with just that kind of euphoric high that we get when we get this unexpected surprise. And trading can, no matter how we handle our trades, whether we handle them very professionally or whether we handle them very haphazardly, we can always get that unexpected surprise. And that can be really addicting. But there are other problems too, and that's one of the things that this is in Trading in the Zone where I kind of related this, where I was speaking at a conference, and I was talking to an editor from one of the major publishers in our industry, and he asked me, he said, why do people who are so accomplished, in their lives, in their other part of their lives, in their professions, can fail so miserably at trading? What is it about trading where so many people are we all doing the wrong things? And yet we're so, and yet people get into it, and we're really attracted to it. And the way I answered them was that I said that people really are attracted to trading because what it really offers us is this unlimited freedom of creative expression. It's like it's an endeavor that is sort of outside all the normal social structure that we all grow up with. So for an example, when you consider that each of us are born into some sort of society, so a family, a region, a state, a city, a country, whatever, and all these societies have rules about how we need to behave. And the problem is that when people can be born into these social structures where there's naturally a high degree of correspondence between the child and the rules that already exist. And then other kids can be born into the social structures where there's a very high degree of a lack of correspondence, meaning that whatever the kid is naturally attracted to, now you think about it, regardless of a child's, let's say, inherent behavior characteristics, there is one characteristic that is common to all children. And what is that characteristic? Curiosity. Curiosity is a characteristic that is common to all children. Leave children alone, and they will naturally explore their environment. Quite naturally. Now, are all children naturally attracted to the same things? So in other words, there is some sort of selective process going on, isn't there? In other words, out of all the things that are available in the environment for a child to be attracted to, children will naturally select. And this goes all the way back to when the kid's an infant. So there is some sort of force inside of us, inside of each of us, that naturally selects what we are attracted to in the environment out of the vast array of things that we can be attracted to. Some societies, meaning families, parents, whatever, support these natural attractions to some degree or another, and some do not. The problem is that when they're not supported, meaning when we're denied our ability or denied, let's say, the experience that we want as a result of these natural attractions, meaning that our parents are saying, no, you can't do that, or whatever, it builds up what I call these denied impulses. In other words, if you think about it, I think like our mind in some ways is like when we're attracted to something, it's like when a child, take a child that's they're curious, they're playing with something, and you take it away from them, and what do? They start crying. Why? They're not done experiencing, okay? It's like the desire for a certain type of experience creates like a vacuum in our mind. And that vacuum has to be filled with the experience that we desire. Deny it, in other words, as an outside force, deny that experience, and the child will naturally cry, and crying is a natural mechanism to let's say, put the child's mind back into balance. What scientists have also found is that tears are composed of negatively charged ions, and crying, I think, is just simply a natural mechanism to put our minds back into balance, because what happens is that the lack of experience, the lack of the child being done with that experience didn't fill up the vacuum, and the crying reconciles the imbalance so that the child can be in a state of relative balance and go on with their lives. However, many children are not even allowed to cry, right? Especially males. And so therefore, as a result, we end up growing up with a buildup of these denied impulses. So that when we, as adults, when we get to the point where we discover trading, we find our sort of panacea of freedom, where we basically make all the rules. The only rule is that you have enough money to open up an account. Other than that, you decide when to get in, you decide how long to stay in, you decide when to get in, to get in with how much, and when to get out. Right? In each moment, the market does offer us as traders this opportunity to get into, to add to, detract from, or exit a position every moment. And we make all the rules. The problem is, we grow up with a natural aversion to making rules, because we've been trying to get away from them all of our lives. And that's one of the reasons why it's so difficult to even do the kind of exercise that I'm going to suggest on Sunday, is because it does require making and adhering to certain rules. And you probably will find there'll be a natural resistance to even doing the exercise, regardless of the benefits that you perceive that you'll derive from it. And that's all right. And that's what I said before. It might take a long time to get to the point where you're ready to do this. Because it's a two-edged sword when you look at it. It's like here we've got freedom, but with freedom comes responsibility, because or even not wanting to take responsibility because of the painful ways in which we learn about what we're responsible for, what we're not responsible for. But also with freedom comes the potential to damage ourselves. So we have an unlimited environment where we can do an unlimited amount of damage. The way to prevent damaging ourselves is to institute some regimen or some rules, but what we have are a backlog of denied impulses where we weren't allowed to express ourselves as we grew up, giving us a natural aversion to creating even our own rules. They're not somebody else's, they're our own. So it's like, hey, I found this panacea of freedom, unlimited, I can express myself in any particular way, possibility of unlimited riches, but oh, I've got to create some rules, and not only do I have to create them, I have to learn to abide by them. Whoa, hey, no way. Which makes it easy to trade randomly. Because see, when you trade randomly, meaning when you're using virtually an unlimited number of variables to either enter or exit a trade, not a limited set, but in essence an unlimited set. What do I mean by an unlimited set of variables? Okay, listening to the news, or listening to a friend, or maybe in combination with some technical advice or technical signal that you might get. Nothing that's systematic. Because see, by trading randomly, you can easily take credit for the trades that work and easily do what? Distance and separate yourself from the trades that didn't. Psychologically distance yourself. In other words, not take responsibility. Trading is the hardest easy money that you'll ever make. Trading is simple, and it can be easy. When you get the right mindset, it is easy. So it's almost 9 o'clock. As far as I'm concerned, we're done unless you guys have any questions. And also, before we split up, I just want to know that what are we going to do tomorrow? What do you think we're going to do? What are we going to get into and why? This is really important. What are we going to get into and why?
Mental vision of where we trade at night.
A what? A mental vision?
Well,
Okay.
what our mental state is now.
Okay.
And the inherent weaknesses and how we do that.
Okay. But can you say it more specifically?
Where we're screwing up now.
Okay, yeah, we know that. We already did that. We did that tonight. Okay, but what are we going to get into tomorrow? What specifically are we going to get into?
Installing beliefs.
Yeah, we're going to learn about the nature of beliefs. Because in essence, this is what this is all about, right? It's really all about what we believe. Because what controls our interpretation of information? Maybe I wasn't clear about that, and that's why I'm asking. And I'm glad I did. What controls our interpretation of information? Something has to. Or what we believe, exactly. That's without really saying that. That's in essence what I've been saying all along. When I said if I believe that anything can happen, then that will control my interpretation of information in a way that will cause me to act in a way that's consistent with what I believe. Something has to control the way we interpret information. We don't all interpret it the same way. There has to be some mechanism. So that's the mechanism that we're going to learn how to work with in a way so that we can interpret market information in a way that's consistent with the realities from the market's perspective. In other words, how do we interpret market information in a way where we keep our minds objective and neutral? Market gives me an edge, define the risk, I take the trade. Edge, define the risk, I take the trade. If you want trading to be more than that, then you probably don't want to be here. Because that's really all trading is. It ultimately becomes an exercise in just accumulating money based on your ability to objectively perceive an edge, define your risk, have a plan for taking profits. The trade either works or it doesn't. And you just keep on doing that over and over again.
How do you reconcile some of that with being an intuitive trader where you just, take the trades that come along?
You're way ahead. We'll get on that on Sunday. That's a good question, but where you just, this is basically just an introduction. So yeah, we're going to talk about trading intuitively. Remember I said I was going to put this into a context, trading mechanically, subjectively, and intuitively? We're definitely going to do that. But we definitely don't want to talk about that right now. That's way ahead of ourselves. Anything else? Does everybody have stereo headphones, stereo tape player and headphones? We're going to use them tomorrow. If not, you can buy a cheap one at a drugstore somewhere. Yes?
So we're bringing in a Walkman tomorrow?
Yeah, bringing in a Walkman tomorrow, right. Is everybody, yes? Everybody got that? Okay, well, tomorrow morning.
7:30?
7:30. Well, 7:30 there'll be like a continental breakfast.
What time to start?
We'll start around 8.
How do we need the tape players for?
I don't know yet. Well, I don't know.
Okay.
It'll be sometime, probably tomorrow afternoon sometime.
Is anyone coming in here tonight?
I think they're gonna leave all the equipment. I think the
So we
door's
can leave our
gonna be
books
locked.
here and-
Yeah, I would say you'd be able to leave everything you want, because you can make money without any skills. So when you say make money, yeah, that's great. But really, consistent money is a byproduct of the kind of skills you've acquired. And unfortunately, I say unfortunately because all these skills are mental. They're not physical skills. They're not muscle memory skills. It's not like you can hire a tennis coach or hire a golf coach and show you how, to make the proper swing and just practice at it over and over and over again. And eventually you'll get it in your muscle memory and be able to swing the racket correctly or swing your club correctly. But still, even with that, a consistently good score in golf is a function of what? What's going on in your brain? Because you can learn how to swing the club absolutely perfectly, but not do it every time. And the reason why you're not going to do it every time is because there are going to be distracting thoughts flowing through your brain, causing you to focus on something other than what you need to be focused on in that moment. And it's the same thing with trading. If you're focused on the money, then you're not focused on the skills you're trying to acquire. In other words, really what I want you to do is get to the point by Sunday afternoon and say to yourself, the only reason why I'm going to trade Monday morning, the only reason why I'm going to trade is to use my trading as a means or a vehicle to acquire certain mental skills. The skills that you know that will promote consistent results, or that will result in a consistently rising equity curve, or an equity curve that rises on a nice consistent basis. What did we learn yesterday? What sticks out in your mind? Beliefs, okay. But anything more specific?
You don't need to know what's going to happen next.
You don't need to know what's going to happen next. Good. However, that's a problem, isn't it? Why is that a problem? What is it about the way our minds are wired that cause that particular thought or notion, as Dave would say, to be a problem? Associations, exactly. Yeah. Not only do we want to know what's going to happen next, our minds, by the way that they're wired, our minds are wired in a way. They're hardwired like the motherboard of a computer. It doesn't mean we can't change it. It just means that at the moment, until you do change it, until you do something specific to cause your mind to think differently, it will automatically and without any conscious thought on our part, meaning we don't have to think about this happening, it will happen automatically. If the now moment, which we've learned is unique, and why do we know it's unique? When these patterns, in other words, what we want to do is technical analysis helps us identify patterns in group human behavior. The patterns repeat themselves over and over and over again. The outcomes to the patterns, however, do not. And the reason why we know that the outcomes to the patterns don't repeat themselves, at least in relationship to the last trade or the trade before, is because there are always different people involved in other words, in the outcome of the pattern. So the pattern can look exactly the same, it can feel exactly the same, it can measure exactly the same, and because of those similarities, our minds will automatically associate what's happening in this now moment with something that's in our brain as a memory, and cause us to think as a result of that we know what is going to happen next, based on our memories, not on what's happening in the market in that moment, or what the market's potential to move is in that moment, or what the market might be telling us in that moment. This is an automatic process. We don't have to think about this happening. It's automatic. Basically, what you have to do is render this process, this automatic mental process, kind of dysfunctional. Make it not function any longer. You can do that. The best traders at some point have, in one way or another. They may not have done it, systematically or methodically, the way that we're doing this now in this workshop. Usually it takes some catastrophic, emotionally catastrophic experiences for someone's mind to be wired differently, meaning that one of the consistent themes that runs through every great trader's life is that every single one of them usually has lost one or more fortunes before they got to the point where they became consistent. It's these kind of catastrophic, and it doesn't happen to happen to you, Greg. Okay, that doesn't have to happen. Okay, I know, that's what I'm saying. But you probably read a lot of stories and thinking, okay, when's that going to happen to me? It doesn't have to happen. What?
It happens.
Anyway, go ahead. What are you going to say?
Yeah, I was just thinking, one of the thoughts to me, you look up the longer you're in, and a lot of us, most of us have transitioned from other fields.
Mm-hmm.
The longer you've been in other fields, you come with more baggage. It takes you longer to, quote, get rid of your, this baggage because you work in other industries. Take you longer to cleanse your mind.
Well, it makes sense, doesn't it? I mean, think about it. I mean, let's put it this way. You take somebody who grows up in a trading family, whose father, let's say, trades, or his uncles or his brothers trade, and they understand, let's say, the inherent nature of what trading is all about. And one of the first things they teach them is, let's say, especially in Chicago, where there are a lot of trading families, where there are generations of traders that trade on the floors of the futures exchanges. I mean, one of the first things they're going to teach them is that, let's learn how to cut our losses. First, let's learn how to scratch a trade, and then let's learn how to cut our losses. And so, the first thing, if you understand, is okay, if an inherent part of being a successful trader is first learning how to cut a loss, then it probably won't take that long for you to learn how to do it. And all the, let's say, all the thinking implications that go with doing that, as opposed to coming from a situation where you're coming from a profession where you're expected to know what's going to happen next. You're relied upon to know what's going to happen next. And even if you don't know what's going to happen next, you can say and act like you do, and people are going to believe you anyway. Right? That's right, because that's what people want. And if you're wrong, it doesn't matter, because you can intimidate people to make them act like you're right. And that's one of the reasons why, it's also another reason why it is so difficult to adapt to the trading environment, because many of the skills that we learn to get what we want, in other words, to fulfill our expectations. Remember we talked last night about expectations? An expectation is what we believe projected into some moment, some future moment in the environment. And when the environment shows up the way we expect, we all feel good. So one of the ways that we've assured ourselves of having our expectations fulfilled is through our superior social skills. And what do I mean by superior social skills? Getting ourselves into a position where we can control other people. Whether they agree with us or not, whether their beliefs are in harmony with what we want or not, if we can rise above, let's say, them in a way that cause us to have control over their behavior, then we can assure ourselves of getting what we want. Most of the people that gravitate towards trading that don't start out that way when they're, let's say, in their early 20s or something, or out of college, are professionals that come from those kinds of superior social skills and find it extremely difficult to adapt to the trading environment because of it. Because the market just is going to do what it's going to do. And there isn't a damn thing you're going to do about it until you can trade at a level that, you can basically cause prices to move in your direction. And even then, it's going to be difficult to make it happen for very long. And so the only thing you're going to find you have control over is the way you think. That's the only thing you're going to have control over. You can control the way you think. You can control how you perceive information. You can control, I'm going to say it again, you can control how you perceive information. But it's a completely different process. Now you're working inside yourself instead of working out there.
Mark, can you repeat that? You can control.
You can control the way you perceive information. And that's really what this workshop is all about. That's why we're going to talk about the nature of beliefs, because there is a mechanism by which we interpret environmental information. There has to be. If you look at the nature of the environment and the ways that it can express itself, the environment can express itself in a virtually infinite combination of ways. And yet we don't perceive all those ways in any given moment. And not only do we not perceive all the different ways that the environment can express itself, we can be standing virtually in the same position and looking at the same event and interpret it in completely different ways. Now, why is that possible? How is that possible? How can two people interpret the same event in different ways? Completely different ways. And we've all been in these situations. It's the source of many of our most violent arguments. That's right, different belief. In other words, we're perceiving the situation from different beliefs, different perspective. In other words, different beliefs are operating on our perception of information in a way where the information is interpreted in a way that's consistent with the beliefs we're operating out of in that moment. So when I say we can control how we perceive information, we control that process by changing the beliefs we're operating out of. We operate out of different beliefs, and we're going to perceive the information differently. Because the problem is this association mechanism that I've been referring to causes us to think that we know what's going to happen next. In other words, if the moment is similar, I've got a pattern. Not only is it similar, it's virtually identical to the last one that showed up 5 minutes ago or 5 days ago or 2 hours ago. 2 hours ago it was a winning trade. Now, if I let this association mechanism, influence the way that I think or how I see things, I'm automatically going to think that I know what's going to happen next. Automatically, without any conscious thought about it. And as a result of thinking that I know what's going to happen next, I will behave in a way that's consistent with what I think. And that behavior might, in fact, be a trading error. Remember the errors we put up yesterday? That is a list of all the things we can do, but those are the major things that we do that cause us to, detract from our ability to create consistent results. So I may hesitate. I might not predefine my risk. I might not end up taking profits. There's any number of things I could end up doing because I think I know what's going to happen next. When the reality is, what's the reality? I don't know. For me to know what's going to happen next, really, now think about this. For me to know what's going to happen next, I would literally have to be able to read the minds of everyone who's participating and everyone who has the potential to participate. So that I would know how when they cast their vote by putting on a trade, you might say, how that's going to influence direction overall. Yeah, that's all it really is. It's just a guess. Whenever you're putting on a trade, it's just a guess. And the more you look at it that way, the less significance you'll put on any particular trade in a way by just knowing that really what you're doing is just kind of pulling the handle of a slot machine, but you've got the odds in your favor. You're the house. Because of technical analysis, you're the house. But only if you can execute properly every single time. That is the key. Execution without errors. Every error, other than self-sabotaging beliefs, every error you're going to make as a trader will be the result of thinking that you know what's going to happen next. Every single error. And the problem is, sometimes you will. sometimes you will think you know what's going to happen next, and it will come true. And sometimes it'll be 2 times in a row, and sometimes it'll be 3 times in a row. But I guarantee you, guaranteed, there's that trade out there with your number on it that's going to cause a catastrophic loss if you continue to think that you know what's going to happen next. Because, again, I'm going to repeat, you can make money whether you don't make these errors or whether you do make these errors. You can make these errors and still find yourself in a winning trade. But if you want to create consistent results and not inflict psychological damage on yourself, then you're going to have to take your mind through a process that let's say, renders this association mechanism dysfunctional. Or non-functional, not dysfunctional, but non-functional. You're going to have to keep your mind focused in the now moment, meaning what's the market telling me now about its potential to move in any particular direction based on the pattern that it's displaying in this moment. Not based on my memory of the previous trade or the one before that or the one before that, because this moment is truly unique. It may end up being exactly the same. But if you allow yourself to think that, you are putting yourself in a position where you have the potential to make errors. So are we kind of together about where we need to go with this? Where do we need to go? What do we need to learn right now?
How to get rid of all the old thinking.
How to get rid of all the old thinking.
Yeah.
Okay.
To make room for the educated guess.
Right, so you're just making educated guesses. And where would you say, kind of be more specific about about when you say get rid of all the old thinking? In other words, look at it this way. You guys, you're sitting here, and you have this opportunity, let's say, to expose yourself to certain, let's say, categories or kinds of information. But what you end up exposing yourself to really is a function of your desire. Now think about this. It's really a function of your desire. What do you want to learn right now? What do you want to learn? Tell me what you want to learn.
How to change my beliefs.
Okay, you want to learn how to change your beliefs. Great. Do you want to learn that, John?
No.
No? Okay, so there you go. What do you want to learn?
I want to know it's all right to take a loss rather than fearing it.
Okay, and what do you think you have to do to learn that?
I mean, some of it's mechanical, some of it's knowledge based, but it gets back to that I know the market's going to do next, and so I just sit there.
And so what do you think you're going to have to do to get to the point where you know it's all right to take a loss?
We go back to changing beliefs then.
Oh, okay. Changing beliefs. Okay, good. Anybody else? What do you want to learn, Lloyd?
Well, not back to comment earlier. I don't think you can purge your mind of previous process. I think what we have to do is to create switching points that make us on track rather than the old track.
Exactly. Yeah, because one of the things we're going to learn as we start discussing the nature of beliefs is that I don't think it's even possible to change a belief.
It's hard if you said a lot of the traders you talked to have blown up. I've been trading for 4 years, and I've blown up twice, big, and you make a lot, then you blow it up, then you make a lot, then you blow it up. And I think there's a certain point you reach where the pain is so strong that you do change your beliefs, and then it does get rewired.
Right.
Now, in my previous career, I spent the whole time controlling and negotiating. I always liked it. When I was trading 2 years ago, I'd pick the biggest, baddest stock out there, and I'd reverse it. Because I wanted to negotiate with that stock. And the more it went up, the more I'd put on, because damn it, I'm going to beat it. And because that was what I did in my previous career. And eventually you get to such a level where the pain just, and it's not even just not even just financial. It's embarrassing because you got other traders saying, what the hell are you doing?
Right.
It's that kind of stuff. And then you hit that point, and I think that's when you can finally switch and realize realize what you're talking about, but prior to that, it's hard,
Yeah.
because you have to trust Mark.
Don't you get to a point of replacement though? I mean, isn't some of that when you're taking a loss, you're supposed to put yourself in a mental environment where if you were out of the trade, what the reward of that is?
I'm not sure if I know what you're getting at. When you say the word replacement, you're right. See, when I said you're using the words, change of belief, what we're going to learn in terms of at least the way I look at it is that I don't think you can actually change the structure of a belief that once it exists, it'll be in our minds till the day we die. But what we can do is draw the energy out of it. What we're going to learn about the nature of beliefs is that they're basically energy structures. And that you can draw the energy out of a belief that let's say we find is non-functional or dysfunctional, or not non-functional, but it doesn't serve us. In other words, there are ways that it causes us to look at information and behave that doesn't serve our purposes, it doesn't serve our desires. And so what we can do is we can draw the energy out and replace it with another belief that we put energy into. But see, well, anyway, I'm going to get to that stuff later. But yeah, that's what you're doing. So when you talk about replacement, so you can go ahead and now finish what you were
I
saying.
think the old track's always there, but you just indelibly superimpose the new track, and the more you do it, the more apt you are to make a mistake. But you're always going to be possibly
Yeah,
on the wrong track.
but see, Louis, here's the thing. The old track is always there, okay? However, what you're going to learn how to do today and tomorrow is take the energy out of the old track so that it doesn't have any potential. So that there literally is no more potential for you to behave in that way. Or for you to see or perceive in a way that's consistent with that belief. That's how you know you've really done the work, is when your thoughts are never drawn back to, or you don't feel compelled to behave in that old way. What's that?
Santa Claus belief.
Yeah, exactly. Right. I mean, and see, yeah, in the disciplined trader, is it the disciplined trader or trading in the zone? I'm not sure which. Trading in the zone? Okay. I don't know. Anyway, look at it this way. That's a perfect example. I mean, I'm sort of getting ahead of myself a little bit, but it's a perfect example. If you can draw the energy out of one belief, if it's possible to do it with just one, it's possible to do it with any. And a perfect example is, I grew up believing in Santa Claus. Now, do I believe in Santa Claus now? What? Yeah, we want to trade, right. I wish. Now, listen, can you say that I believe in Santa Claus now? We don't know you don't know me, well, I don't, okay? But but that's a good answer. But here's what's really important about this, is that I would, in the course of my conversation with you, and the words that I would use, I would actually use words that don't really represent what's going on, just because that's the way we talk. So I would say, no, I don't believe in Santa Claus. But what we're going to learn in a little bit, as a matter of fact, when we get started with this, is that actually what I'm saying to you is that my belief in Santa Claus still exists in my mental system. There is a belief in my mental system that says Santa Claus exists. But I have another belief in my mental system that says that Santa Claus doesn't exist. It's a matter of which has the most energy. When I was 5 years old, the belief in Santa Claus had all the energy, and I didn't think any other possibilities existed. So therefore, if somehow or another I could transport myself back to that 5-year-old mentality, and somebody knocked on the door and said, Santa Claus, or all of us, for example, who grew up with that belief, and said, Santa Claus is out in the lobby, how would that belief act on my perception of that information and my behavior? What would happen? I would sprint to the lobby. My perception of the information would be that it's true, it's real, and the energy in that belief would cause me act on my behavior in a way where I would be jumping over you guys to get out in the lobby.
I don't think so. I think I might have just changed it from being the mode to get fest
What's that?
to suddenly realizing you're in a give fest.
Yeah.
You are Santa Claus. If you have to produce.
Yeah. So
who's that fool down the lobby.
Yeah, right. Yeah, exactly. So now if someone knocked on the door and said Santa Claus is in the lobby, how would I behave? How would I perceive the information?
Yeah, right.
It would be irrelevant to me. And as a result of it being irrelevant, how, of me perceiving, interpreting that information as irrelevant, how would it act on my behavior? I would just keep on standing here. I wouldn't change it. Now, these two beliefs are contradictory beliefs. They're two contradictory concepts that exist in my mental environment side by side, let's say. But from a functional perspective, there's no conflict. You see, from a functional perspective, I don't have a conflict at all because one has all the energy, the other one has virtually no energy at all. That's what we're going to end up doing. We're going to end up identifying those dysfunctional beliefs, in other words, that cause us to perceive market information in what? What do we want to do? We want to perceive market information or a lack of perceiving it as threatening, right? Remember the up and down ticks? Here, the up and down ticks, they're neutral, aren't they? From the market's perspective, it's just neutral information that form into patterns. The patterns give us an indication there's a higher probability of one thing happening over another. What causes us to perceive these up and down ticks in something other than a neutral frame of mind? Our fears are one, but basically our interpretations, right? That tap us into our fears. Our interpretations that tap us into our fears. What causes us to perceive these up and down ticks as anything other than neutral? Our interpretations that tap us into our fears. Here, I'm long this market. The market is giving me exactly what I want. I get 2 or 3 down ticks in a row. My interpretation taps me into my fear that the market's going to take my money away. Now, these ticks are no longer neutral. So far, these ticks haven't given me any indication at all that, let's say, whatever trend this is forming has been violated. Or even based on my rules that say, I've got to let this play itself out to tell me, what the possibilities are. Am I willing to accept the risk of finding out? Well, obviously, if I'm ready to jump out of this trade right here, then I have really not accepted the risk. But the point that I'm making is that now the down ticks take on something other than a neutral, let's say, valence. Now they're either overly negative, or maybe even overly positive. How many of us have been in winning trades that think that, it's never going to end? How does that happen? Even after the market has given us ample information to tell us that the trade is over with, okay? Here, you get so enthralled over the fact that the market's going up, you forget about the fact you've got significant reference points with this high, this high, this high. The market gives you an isolated high, starts reversing, and you know what? You didn't take any profits. You're down here at your original entry point. Next thing you know, you're losing money on the damn thing. Didn't take a dime out of it. And why? Because the neutral, in other words, from the market's perspective, these neutral up and down ticks took on an overly positive significance in your mind based on your interpretation. So if we want to create consistent results, we're going to have to, let's say, be able to trade from a carefree, meaning lack of fear, a noticeable absence of fear, carefree, objective state of mind. And what do I mean by objective? Remember we talked about that yesterday too. We're going to go over it again, but just what do I mean by objective? Do you remember the example I gave you yesterday? Anybody tell me? Having access to everything you've learned? Because when you're operating out of a state of fear, what happens? Do you remember the principle? What's it? Okay, go ahead, Jeff. What?
You limit the information that you can.
Yeah, fear does what? It narrows your focus of attention, right?
To what you fear the most.
Right, narrows your focus of attention. Now, the interesting part about in our normal daily lives, if we're afraid of something, our focus of attention will narrow to the point where we're focused exactly on what we're afraid of. But in the market, since the market, it's kind of a little bit different in the markets, because the markets give us both upticks and downticks. And if I'm afraid of one of those, if I'm afraid of the downticks for whatever, because I'm long, then in this case, what fear does is cause me to place an inordinate amount of significance on the upticks. So in essence, what I'm doing is avoiding the significance of the downticks. My mind will do that for me automatically. I don't have to think about this. This is an unconscious mechanism. It isn't any different than the example I gave you yesterday. This is a hot burner. I accidentally put my hand on it. My hand comes off. I don't have to, there's no internal arguments. I don't have to think about this. I don't have to make a decision about it. It happens automatically because of the way our minds are wired. So what we're doing is we're becoming conscious of these mechanisms so that we can do something to compensate for them. If it is our desire to create consistent results or fulfill the potential that we know exists in the market. In other words, to become a, let's say, greater version of who we are, because that's in essence what we're doing. By accumulating more money based on our trading, aren't we becoming greater and greater versions of ourselves? Aren't we becoming more and more of who we once were? Because as you accumulate more money, what are you going to do with it? You might hoard it, but then again, you might spend it. And as you spend it, you're just, you're creating something different. You're creating something other than who you once were, based on the ways you can express yourself that you may not have been able to express yourself in those particular ways because you didn't have the amount of money that you have now.
Is there something about this protection, and maybe it's just me, but you're up a quarter.
Chances are not,
Yeah,
John.
in that example there, you're up a quarter.
What's that? What?
There seems to be, in my mind, you protect the money you made. It seems to be like something precious versus, you're down and I'll take a nickel or a dime, loss and get out of the trade. But something about it, I've got a quarter already on this trade. It's this, I hate to ever come out and say, like 15 cents as an example because it falls through. And many times I get out of the trade because of that. Does that feed into your fear issue? It seems more inordinate for me.
What's that? It seems what?
I get it. I'm just saying that if I'm up on this trade, I try to protect it more. And, I miss out on the bigger trades as a result of it seems like.
Yeah, that's really hard. It's really hard to learn how to take profits. Out of all the skills that you're going to learn, I mean, one of the most difficult is really learning how to take profits. But I'm going to give you a way to do that. I'm going to give you a mechanism on Sunday that'll do it for you automatically. So you don't have to worry about it. You don't have to really think about it in the way that you're thinking about it now. And it's simple and it's easy. It's just basically learning how to scale out. But as much sense as it makes, it always amazes me how resistant people are to doing it. is just divide your position up into fractions and start scaling out as the market gives you money. I give myself money as the market makes it available. And then if it comes back, or it comes back to your entry point even, you know, it's like you still have a fraction of your position on, and you can let it see if it's going to just bounce right back off support again and go right back up, or go through it, and then maybe might take a small loss on the last portion of it. But then again, since you don't know how far it's ever going to go when you get into a position, you want to be able to set your whole profit taking regimen up in a way where you can take maximum advantage of whatever the move is, whatever the move ends up being.
I think I had a little breakthrough. I got out here that I had wrote out, you know, on the plane yesterday what I wanted out of this. One is I wanted to be more patient, and two is I wanted to basically let go of the fear, so that when I'm buying it on the bid as it comes in your example, that when I buy it I don't just immediately bail out when it goes down another tick. And I think what I got was, what you said was, I didn't accept the risk of the trade in the beginning.
Right.
So it's basically, if you just accept the risk of the trade, I can be more patient, and I can allow it to jiggle against me or hold it and go from there with it.
Right.
And so that was my breakthrough.
And what does it mean to accept the risk? What exactly does that mean, Greg?
I guess it means to just adhere to my stop loss, and that's okay.
The part that I was looking for was that's okay. What does it mean to accept a risk? What does it mean to accept anything?
I'm not sure I understand.
Well, that's why we're doing this. Okay? What do you think it means to accept anything? What are the implications of acceptance? Whether it's in the market or anything else in your life. What are the implications?
Understanding.
Okay, understanding.
Realizing you made a mistake.
It's predefined that you accept that as just.
No, I'm not. I'm doing more generic, not the market. What does it mean to accept anything?
Whatever happens,
It's
you're
okay.
comfortable with it.
There you go. Whatever happens, you're comfortable, meaning you're at peace with whatever happens. In other words, the situation is completely reconciled in your mind. If you're going to risk a penny on that trade, or risk a dime, or whatever you're going to risk, that you have genuinely accepted. Genuinely meaning you're at peace with the fact that you're willing to spend the money.
Right.
And there's no internal conflict. So although we're getting way ahead of ourselves, but we're in this moment right now for Greg, okay? It's all right. So Greg, what would it mean if you're not at peace with it?
I guess if I'm not at peace with it, I got fear.
And then what are you going to
It's gonna cause me more harm.
do? Okay, what are you going to do then? You're not. See. So now you've realized. Now you're looking at this chart. You say, okay, I've got to risk a dime. That's what the market's telling you, right? Based on the pattern.
Yeah.
Based on your previous experience at this pattern, saying this pattern warrants risking a dime to find out if it's going to work, right? But now you're learning to monitor yourself and realize that you're uncomfortable with that dime. You're not at peace with it. It's not reconciled. There's conflict. And you can know that in many, many different ways. One would be just the amount of hesitation you might have to hit your keyboard or pick up the phone. Now, what are you going to do?
What am I going to do? Find some way to deal with the fear. I got to do a little more breathing. I guess I got to acknowledge that the fear is there, and then reevaluate. Do I want the risk? Do I want the
Okay,
dollar?
good. Now, and what might the solution be?
Then my solution is say, yeah, okay, I can live with that and go on.
What if you're just kidding yourself? What if you're lying to yourself? Because if you're uncomfortable in the first place, chances are, just by you saying, okay, I can live with this, isn't going to do it. It may, but chances are it might not. What would really do it? What would really get you comfortable?
I guess just trusting myself that I know that if it goes down the dime,
No. No. What's going to get you comfortable?
Only if it goes in my way. I don't know.
No, there can either be something that you're comfortable with.
Yeah, scale back until you are comfortable. So if you're trading 1,000 shares, trade 500. And if you're not comfortable with 500, trade 200. If you're not comfortable with 2, trade 100.
I don't like that answer.
Yeah, or don't put the trade on. The best thing would be, in that case, is just don't put the trade on. If you can't get comfortable with the risk, where you're completely reconciled, then either don't put the trade on or scale back until you are comfortable, until you make it a carefree situation. You know, at 1,000 shares, risking a dime, you know, I mean, that's only $100. I mean, that's not, realistically, we're not, these numbers are probably not what you do, but at 1,000 shares, risking a dime, it's, you're uncomfortable. And you can't get comfortable. In other words, you're being honest with yourself, and you can't get to that really carefree space. And so if you scale back to, let's say, 750 or 500 shares, and it becomes virtually meaningless to you, like, that's probably why you don't like it, because it's virtually meaningless. But at least you're in a carefree state of mind, and you're participating, and you are participating.
It's also a good way to reinforce whether or not your idea will play out.
Exactly. What difference should it make, Ray? Whether you're trading 500 or 1,000 or 10,000, really? Because if you're really thinking about what skills I need to acquire and trading properly, it shouldn't make any difference at all. So scale back until it's carefree, until it's meaningless. Because that's exactly what it has to be. Because when it's meaningless, then you've eliminated your potential to define and interpret those up and down ticks in anything other than a neutral way. Because why? Why? Because you don't care. You don't give a shit. Yeah, good. So that does make sense to you? No? You don't like it? Oh well.
I guess, you know, I want to argue with you. I guess because I've been, you know, scaling back, I've been in trades where you got 100 shares and you're scared, and been in trades where you got 5,000 shares and you're scared. And
I can see I can completely agree with you. You got 100 shares and you're scared because you don't trust the pattern, even though you're only trading 100 shares. You're in a 5,000 shares because you're scared, because 5,000 shares you're risking too much in relationship to the amount of equity that you have. In any case, you're still, you know, well, let's put it this way. You still have the potential to make trading errors because you're afraid. Now, I'm not saying none of these trades are going to work out. Any one of them could work.
well, I think maybe what it is because I've been burned for 10 points in a minute and a half, and you can't get out of 100 shares.
And
you know,
and would that be in a market that is in a stock that's pretty liquid or illiquid?
liquid.
Oh, yeah, that's right. Trading illiquid stocks.
Yeah,
Okay.
It's liquid. It's an IPO.
What?
See, I understand what you were saying a minute ago, apply, you should be in a carefree state. If you're not, you don't get out.
That's right. Exactly.
So there's no in between.
That's right. Or scare. Or let's put it this way: if there is an in between, you're aware of it, and you're constantly monitoring yourself. But we're getting way ahead of ourselves right here. We really are. So, what?
You can start off being in a carefree state of mind, right?
Yeah.
Let's say you've actually got to that point where you
Okay.
can trade, and you can handle the risk, it's predefined, you accept it. Then something happens like, as this is John?
Greg.
Greg says, and all of a sudden, you know, the market really moves against you, and you can't get out. How do you stay carefree under those circumstances? I mean, you're really like taking a beat.
You may not. You may not be. I'm not saying you. First of all, Drake, you can't. When you say how do I stay carefree, it's not a matter of how do I do it in the moment, because it'd be extremely difficult. In most cases, probably impossible. What you do is you set up the circumstances in your mind in advance, so when these situations occur, they don't affect you in the way that they used to. In other words, it's the kind of training that you go through. So for an example, this isn't any different than pilots or people in the military or people that their profession is inherently dangerous, where they have to do rescue missions or something like that. What they do is they train over and over and over again, so that what would be catastrophic to a normal person is just everyday circumstances to them.
He's handling it.
Yeah, so you can handle it from a relatively, if not completely carefree state of mind, confident, carefree state of mind. It's a matter of how much training and work you want to go through to get yourself to the point where a circumstance like that wouldn't affect you. It's possible, Jake. It really is. It's just a matter of how much effort you want to put into it.
If you believe you have an edge too, then the vacuum sometime in the future is going to go the other way.
That's right. You'll get vacuums in your favor too. Right, exactly. You will. You'll get vacuums in your favor. That's right.
But I think the downside of what you're saying is you control the amount of capital you risk in that particular trade. Because my partner's in a trade and he's been sitting 4 weeks and it's still closed. So
Wait. Say this again. Your partner what?
he was in a trade where the stock ceased trading. Well, the probability is if they have some sort of violation of the policy or whatever, and he'd probably lose all of it. So you've got
Right.
to enter any trade with the idea that
Right.
yeah.
That's right. Exactly. Like the exercise.
control it.
That's right. But the exercise that we're going to set up tomorrow, like the trading in 20 trade sample sizes, we've got to set this up in a way where the amount of money that you would need to risk to do this exercise is equivalent to losing on all 20 trades. If you took 20 losses in a row. You've got to be able to accept the risk and set it up in a way where you can accept the financial value, dollar value of losing 20 trades in a row. The likelihood of that happening is very remote, but it could happen.
At least from my perspective, I get caught in these reactions because I'm trying to guess the market. I'm trying to find the bottom, and then the market. I know this is the bottom, and I'm fishing for it, and then the market just starts screeching down further, and I'm
Okay, my mic's, jeez, my fault. My mic's working now. I just had to unplug it and plug it back in. So sorry for the bad audio at the beginning of the call. Let me turn that down a little bit. Alright, made some progress on the review. Thought about some things and thought about some changes I can make to make this process easier. One thing that, if you don't know what I'm doing, obviously because I'm not showing it, but I'm reviewing my the backtesting that I've been doing and reviewing the actual stats, logging the stats in my journal. I use Edgewonk 2.0 right now. I'm going to be using Edgewonk 3 in the future. I can just transfer it in the future. But I reviewed the screenshots and everything, and I have it on an Excel sheet. I just transfer from SoftFX to Excel sheet. There's something that you can do to make it real quick. But I thought, okay, why don't I just make a stat sheet in Excel and just have all the data in there and automatically, and then as soon as I transfer the information from SoftFX, it's already locked. The one thing that would be taken away from that is a review of the review of the screenshots. I would have to note which, because I'm taking partials on these trades and it breaks it up differently. I have to know which trade number this is, and then I have to go to my file instead of having it all in one location like the journal. So complications. I think it's still worth it to have the Excel sheet, at least have a quick glance at the stats. But it would take away the factor of well, I could still review the screenshots. There's something I'm gonna experiment with, see if it's beneficial, more beneficial or not. But anyway, that's something that you guys aren't interested in. You're interested in charts, right? So let's bring up the charts. Oh man, that's hilarious. Okay, main view. Okay, there you go. Let's refresh this real quick. So Dennis in the market going crazy. Nothing to do here yet. Nothing to AUD. Nothing to on gold. It's in a bad area. And then I think we already looked at Bitcoin. That was like the first thing that popped up. All right. Okay, I understand. Let me do that. Nothing on Bitcoin either, right? I mean, there's a buying opportunity on Bitcoin. I'm already in Bitcoin, but I like the buys. Any buying opportunity is a good buying opportunity. What does that mean? Okay, I'm gonna go through quickly the pairs. And like AUD CAD like legitimately set up under the trend line. Unfortunately, if you took the setup, I mean it failed. Nothing set up. AUD NZD is setting up right now. That didn't give us a pattern. CAD-JPY. Yes, this is it. This is it. This is exactly what we want to see in the situation. A break of the zone. That's beautiful. That means there's another opportunity coming. There's always another opportunity coming. But this means there's another opportunity coming soon. Okay, so if you took the sell there, this target was a good target. It actually hit the secondary target that we were looking at. Should be in last week's stream, and in the last few weeks blog posts. Now the blog post, you'll be able to find it in the Discord server. The link to that's in the description. I am transferring over to a different website where I'm posting blogs or doing the blog posts. All right, that's CAD-JPY. So if price gets down here, you can wait for a break of the trend line, look for a correction and impulsive move up. If price breaks lower, let's actually go to the daily. Wow, that would be, geez, that would be, I don't know. It's too perfect. I'm skeptical when things are too good. It's a perfect head and shoulders, which oftentimes they can fail. Yay. A real simple thing to do. It's about to make me really do this. Okay, a simple thing to do is wait for the break of that demand zone. Wait for a break of demand zone, wait for a correction, look for a sell. Like, you can keep it that simple. Let's only talk about the interesting stuff now. I don't think that reached the zone. It didn't look like it reached the zone. That's interesting. UJ, I just saw a sell instead of the buy I was looking at. US 30, still looking for a correction. Yeah, it's very, very riveting stuff right there. I forgot I was like actually talking. Here. I'm seeing this as a potential sell. Like, price getting to the top of this range. We have price moving, scaling down to the bottom of the range right now. So we should start looking for sells in this situation. Looks like we already are looking for sells. I just had a tighter trend line than what I should have had. Okay. I'd like to see more corrective pattern form here, honestly. But I'm looking for this to scale down, potentially break this low here. If it breaks that low, looking for a longer term, at least price to get down to the bottom of this range. Okay. All right, so that's it. So thank you guys for watching. I said, like the description says, like, I honestly hope like this process like motivates people in the future, and this is something that I envisioned like once I first started trading, and I'm happy that I'm finally starting to do it. Like, just have it over the shoulder like documentation of the things I do with trading. Because, like, honestly, like, what other point in time have you ever been able to have a camera and record stuff, right? And it can be accessed by anybody in the world. I honestly think this is awesome. But I'll catch you guys tomorrow. Tomorrow's Friday, and do more backtesting review. And hope you guys have a good day.
Opportunities or potentials exist beyond that belief, and they're real. So let's take a break, and we'll. Okay, so we're ready, right? Go ahead, Greg.
I have a question.
Greg has a question. Good.
Not the break though. And I believe this too.
Well, certainly don't tell me if you don't believe it. So.
You say you got to develop this carefree attitude, and I agree that you have to be flexible. Sometimes I've seen this in other people, and even with my own trading. Sometimes you don't get a feel until you have a little pilot position.
A little what?
You buy 100 shares to get a feel, is it going up or is it going down?
Oh, okay.
Just to get the feel.
Sure.
Somehow.
You're probing the market in a way.
In a way,
Yeah.
but it also gives you a different connection with it, because you can feel you're long and the thing's going down and it's doing something to your mental state that, ooh, hey, I better be flipping this thing out, and it's really a sale, not long. So how do you, I've seen people, arbitrarily, they come back from lunch and they just immediately, within 3 minutes, put on a position because they want to get the feel again.
Sure.
How does that reconcile with the carefree attitude? Well, I don't care if it's going up or down. Lee?
I don't know. First of all, I don't really see a contradiction.
Okay.
But it's also a better question for tomorrow.
All right.
Okay? Because that's the kind of question that